Hey guys, welcome back to another video, and today I wanted to talk about a couple stocks that I was asked to look at, and I'm going to kind of share where I think they could potentially be headed. So we're going to start this video off by talking about Wkhs, or Wkhs. Now I had mentioned this name a while ago in a video I made on this channel, and I had suggested that you could potentially long versus these lows here, and we would see a push over these highs. We've seen that, and I kind of wanted to talk about where I think there would be some significant supply. So I had mentioned when it set up this continuation pattern that we'll most likely see new highs because we were completing this 5-wave cycle higher in a zigzag trend. We built out this first, second, third, and fourth wave, and now we finally pushed higher on this fifth wave here. So what we could expect in the price is a push up to these extensions up here. We have this 138.2% extension sitting at 26.53. There's most likely going to be some short-term supply there. Right now the stock's kind of consolidating after it broke past these highs, so it should push up to these upper extensions. Even on a short-term basis, you could actually long versus yesterday's low of day, and we should see a push up to these extensions. Although in this case, it doesn't really have the best risk reward since you basically would have a 10% stop loss. Not really what you want in a trade like this, but you should see a push up to these upper extensions over the next few days. Should see this 26.53 level, and then the 161.8% extension sits right at about 29. There's also kind of supply confluence around 28 to 29 a share. So usually this first wave and this fifth wave are going to look pretty similar in size. So a measured move in this case, since this first wave was from 50 cents to 550, would be 5 points above those highs. Those highs sit at 23, so you should see a push to right around 28. It's a little less than that, it's more like 27.8, but if you round up, it's right around 28 a share. So you have kind of that 161.8% extension sitting right above there, and then you also have a measured move from this first wave to fifth wave, sitting right at about 28. So there's a good chance you have significant supply come in. Potentially we break right over that 138.2% extension, kind of play out that measured move, and then maybe build out an ABC wave from there before then potentially making new highs and giving you a decent trade opportunity. I think we could see something like this where we see a push over this 138.2% extension and then an ABC wave back down. That ABC wave should build out to around the 38.2% extension of this overall move. So I think once we come in at 28, maybe a little bit higher than that, I do think we build out an ABC wave and we do come back down to about 18 to 17 a share. That should be where the 38.2% retracement sits. It depends on where exactly we top out, but it should be right around that 28 to 29 area. Potentially a little bit over that level. So you've kind of got a lot of supply confluence up here, but we should still see a push higher in the shorter term. I would personally look to short this stock kind of once we put in a set high around that 28 to 29 area. I would look to get short against those highs, and then I'd look for a retrace down to this 38.2% retracement on an ABC wave. Or you could wait for an AB wave to build out, and then you could short on that C wave versus the highs that we set. It all depends on what the risk reward is and how it kind of builds out this ABC wave, but you should get a pretty decent risk reward entry on a trade like this. So yeah, that's kind of my views on Wkhs. You kind of have that measured move at around 28, and then you've got that upper extension sitting at around 29, so there's a lot of supply confluence up there. So I do think we push up to those levels, but after that point I think you get significant downside from there, at least back to that 38.2% retracement, sitting at around 17. Now, the next stock I was asked to look at was NKLA. So this stock has sort of an interesting chart here. There's not a lot of data to really model this off of, but the stock is over this downtrend line that it has from back here, and it's also consolidating right above this previous demand zone. So potentially you could long this stock against this 78.6% retracement at about 28. I think that could be a decent trade. Right now you're risking about 3 points, and potentially we could see a push over these highs, so you're risking about 3 points for maybe even 30 points. Usually the 78.6% retracement does act as a pretty decent short-term demand zone. Usually the stock's going to slide below that level eventually, but oftentimes it does act as a decent short-term demand zone. So I think if you were looking to get in this stock, now's a good time to get into it. Put your stop versus these lows, you're risking 3 points, maybe you have an upside of about 30 points. Again, below these set of lows here, I would really want to look to stop out of the trade because you're probably going to see further slide, maybe even all the way back down here to this $15 level, so you're not going to want to stay in this stock if it does slide below those lows. But you could buy against them and potentially we see a push higher here. Again, pretty simple analysis, there's not a whole lot of data to really model this on, so this would be my views as I think you can long versus those lows and potentially we see a push higher. Now the next stock I was asked to look at was Kirkland. I had discussed this stock in a different video before, and I was suggesting that we could see a push up to this 161.8% extension at about 1863 since it's kind of setting up this cup and handle here. The only issue with this setup is it kind of fell below this trend line we have here, and it also fell below that 38.2% retracement, which is usually where you're going to find demand on a cup and handle setup, is right at that 38.2% retracement, sometimes a 50% retracement, but if you get all the way down to the 61.8% retracement, it's not very likely that it does break out. If it can clear this trend line again here, I think you'll have potentially a decent setup to get long and put your stop versus these lows here. Otherwise, I think it's totally possible we do see further slide here, since it did see declines all the way to the 61.8% retracement. Again, oftentimes when you see declines of that 61.8% retracement on a cup and handle setup, you're going to see further slide in the price. It's pretty rare that you see a retracement to that level and then you see new highs, because usually if you see a retracement to that level, that usually means that there's usually a lot of overhead supply above. Otherwise, you wouldn't retrace that much of a move. So to put simply, I think we could potentially see further slide here, but if you break back over that trend line, I think you could have a decent trade setup again. If you're still looking to get long this stock though, and you believe it's going to break out, well then you can long versus these lows here at about 582, and potentially we see a push to that $18 level. That's going to be the extension you're going to want to see, is that 1863 level. Again, since it fell below that 38.2% retracement and trend line, I wouldn't personally look to get long this stock unless it can break back above those levels. So until it can do that, I think we see further slide in the price. If it is still able to break out here, though, you should see a push of that 138.2 to 161.8% extension sitting between 16 and 18 a share. So the next stock we're going to be looking at here is JMIA. Again, not a whole lot of data in this name either, so it's kind of hard to model this, but this stock could have potentially built out an ABC wave here, and this could be the start of a 5-wave trend higher back to its IPO highs. I think this is a possibility. In this case, though, if you were to long the stock here, you don't really have a place to put your stop against. It's coming to the 78.6% retracement. Usually you're going to find some short-term demand there and then maybe make a push higher. So we probably will see a push higher here. The question is how high. We should see probably a push back to this like 50% retracement here at about 1553. I think that's pretty likely. Usually on a bear retracement, you're going to see a push of that 50% retracement. So I think it's likely that we see that level. We should find demand off this 78.6% retracement, at least bounce back to these highs, and then potentially we see further slide in the price. Or this could be the start of a 5-wave cycle higher, where then we see a push back up to these IPO highs. Again, not a lot of data to really model this off of, so it's kind of hard to say, but we should see at least a bounce off the 78.6% retracement, and probably a retrace to the 50% retracement of this short-term drop we had here. So that's my views on this. I think it's possible we see 15 a share again. So again, you kind of need more information here to kind of go around taking a trade here. Probably see a push higher here and a retrace, and then either further slide, or this is the start of a 5-wave cycle higher where then we see these IPO highs again. That's kind of my views on this. I think this could potentially be an ABC wave, and then this is the start of a 5-wave cycle higher. Totally possible. Not really sure because I don't really have any past data to go off of. The last stock we're going to be talking about in this video is BA or Boeing. I mentioned this in a previous video that we would see a break below this fractal to run stops, and then we'd see this 155 level. Saw that, and then we bounced off that level. I mentioned that you could potentially get long off that level, but again, I think longer term we still see further slide here. Potentially even back to these lows that we had all the way back in March. I think that's totally possible. This is not a stock I would look to personally get long. The chart's sort of structurally broken here, so anything really below 170 is going to be a sell. Anything above that level you would look to buy against 170. That's going to be a pretty big area of supply and demand here, is that 170 level. So again, I would look to short against that level right now personally, and I would look for further slide in this name, potentially even back to those March lows. Again, kind of the same idea I covered in my first video, that we could see those March lows again, but shorter term I was expecting some downside, which we got, and then we bounced off that level, came up back to this $200 level, and now we're kind of seeing further slide. If we slide below these lows back here, you should expect a quick drop, possibly even back to this area down here. Potentially we see something like this unfold, where we see a drop back to these lows we had back here, maybe a bounce, and then a slide to either the same lows or potentially new lows. Again, I think this is a long-term ABC wave here, so should see further slide. I don't really think this is a name you want to look to get long here. I think there's a fundamental story that is quite bearish. Again, I do think this chart's kind of structurally broken, and you have a ton of overhead supply here, so most likely the stock's going to continue to get sold for quite a while. So yeah, that's kind of my views on some of these names that I was asked to look at. Most of them I couldn't really model because there's not a whole lot of data to model them off of. Again, they could potentially offer some decent trades. So yeah, if you enjoyed this video or it helped you out in some sort of way, make sure to subscribe and leave a like. Thank you for watching.